So how do you guys enter, at what stage?
So we actually can enter at any stage, but I'll just say that the nature of investors in this region, I mean, there are still some crazy stories from Silicon Valley and US market that people invest in just idea pitching over the Zoom. If we talk about GCC, the nature of investors changed because now we look into traction. So yeah, idea might be great. Do you have proof of concept? Do you have maybe potential clients already? Do you have some traction? This is when we ready to look at. Why I say different stages?
So you get into the depth of what's the experience of the founder, how educated he's around that industry, and whether he's able to shoulder that idea.
The thing is that
If it's at an idea stage.
yeah, so there are a lot of risks when you go into startups or businesses, right? So one of the main risks is the founder.
Okay.
Right? Founder risk, when the whole business is about him. Or second one is one big client. So you have traction, but it's all based on one big client. Means
Correct.
if this client canceled the contract with you, your business is dead.
Correct.
And we'll also look at the founder. That's why we have founders programs as well. So we want him to succeed. So we have those services for the founders so they can focus on growing the business rather than trying to hustle and sort out his lifestyle, right? So yes, we do look at the founder. We look at the team. Are they able to deliver? We always ask who is the team, but also it's a risk. You know, they might be successful in their previous ventures. It doesn't mean that they can actually deliver this particular business, right? Then we look at the.
So do you have a research team?
Oh yeah.
That actually understands the research of what's the background of the company, what's the background of the founder, whether this industry on which you are going to invest money has attention right now. I mean, is right now the trending industry.
We do have the diligence team who does that pre-vetting process.
That's the due diligence team.
Yeah. So pre-vetting process to understand, because some businesses, when they come to this market, they're not ready for this market.
Correct.
You know, or let's say the other way that maybe the market is still small for them because of their numbers and who they're targeting. But we know that if we incorporate this business here, from here we can take them outside. We can take them back to CIS countries. We can take them back to Asia, but already as Dubai entity.
Correct.
Because the acceptance will be different.
Very
you
different.
Go there, right?
Very
so you
different,
go
yeah.
there as Dubai founded company.
Correct.
And then we still advise them to not look at the market and in terms of a size. We tell them to be incorporated here so we can help them grow through our programs.
I read a book on written by one author called Saurav Mukherjee on unusual billionaires. And this book explains that they have these frameworks before they enter into investment. So they used to do something called as forensic accounting. The second is the barriers to entry. So if there is enough barriers to entry that not any partners can just, or new company can just compete.
Yeah.
Then you had about clean management to understand what's the background behind management, whether they have the competency
to manage
to manage that. And fourthly, were they generating free cash flows? So once these four pillars were ticked, only after that they used to go and do the due diligence.
Correct.
And that's when they used to understand the deep due diligence used to then help them to understand whether how much we can invest, when we can actually, or the longevity of our investment, and when we can exit.
Exit is very
I think
important.
this was this. So what is your framework when you enter?
So when we enter, obviously we look if we can actually grow this business.
Okay.
Because our investment goes along with our expertise. So we don't
the mentoring part. Exactly. Because of course you have 20 years experience in this business.
We don't give just money because we like the idea or the founder. We look, sometimes business is really great, but we know there is nothing else apart of money we can give this business.
Correct.
So we will still say no, right? So we want to make sure that the companies we own will add benefits to that business. So that's why when we sit down, they say we need $1 million, and then you ask them how they're planning to spend. What is the deployment?
So what are those three things that you look into?
We look at the team, we look at the traction, we look if our company can actually grow this business, because we don't want just to have 20% shares of $1 million business. We want 20% of $100 million business. And if the founder is ready to discuss an exit, thus he has an exit strategy. Because as investors, you invest to exit, make money, right?
Correct.
So you don't want to just grow 100 companies under your umbrella and then, because you don't have time. So you invest to grow and do exit. That's why we look at the main things, which is the team.
Yeah, of course. Now I can understand the frameworks that you are basically made, the 3 frameworks of yours. I mean, it allows you to gauge whether this is an investable company or no.
Yes.
Because you want to understand whether we fit as an investor there.
Exactly.
Which is the most important. I don't a lot of investors don't really think in this aspect. They should actually, because their expertise can really complement this business.
And we also, when we meet investors to co-invest with us, we also ask what they can bring on the table, because when
apart from money.
Exactly. Because nowadays money is easier to find. I mean, money is, I don't say it's easier to get the money from investors, but you can make money in today's world.
Correct.
You can start your AI company, AI agents, you can make money.
Correct.
So it's not about really money. What can you bring? Maybe you have access to government. Maybe you have access to other markets. Maybe you have a business in other country which can actually help this onboard these services, you know? So we look at the investors this way. That's why we act like this. So we meet, and maybe idea is great, the founder is great, the traction is there, but there is nothing we can give this business, right? So how can we sit on board, have any decisions to make, because we want to sit on the board, because that's why we're there. We don't want them to play with the funding they received and say, we tested this theory, it didn't work, let's open another round.
No.
They're like, why are you opening another round? What happened to our money? You know. So you keep on, the startup is a startup. The business owner, me say, okay, I sold 20% shares here, okay, I have another 80%, so I'll sell another 20% here if I just need another round. And you see those constantly opening rounds, and your shares are being diluted, and
the value also of the shares also dropping.
Just to clarify, because sometimes we meet and the founders get scared, like, oh, you want to sit on the board. I said, no, we don't want to control your business. We want to sit on the board so we can guide you, so you listen, right? So we don't want to go into operations. You know this business better than we do.